Hello investors and traders, today I'll speak about Israeli market, Israeli stocks. I will check for you top 5 Israeli companies trading in the NICE in the US, and of course I will tell you my opinion about them, technical and fundamental analysis as usual, as you love it. So let's start with the first company for today. It's ZIM. It's a shipping company. Now its current price $15. At the chart we see, in my mind, it was ABC move, a correctional one. By the way, the stock price now already down more than 80%, so very tough correction. Look here, we see a dividend yield more than 100%, but forget about the dividend yield. Most probably they will cut the dividends. Also here, why we saw such a tough correction in this company. Look at the revenue, last 5 quarters, and net income, and of course the marginality. So it's decreasing. If in the first quarter of 2002 they earned 3.7 billion bucks, the last quarter of this year it's only 1.3, so it's decreased dramatically. Actually the freight rates all over the world decreasing, and it's a problem for the company. So actually it was the last quarter, so it's very easy to explain its stock performance. Let's have a look also on the fundamentals of this company. So we see that the market cap about 2 billion bucks, an amount of employee more than 3 kilo. But it's historical. 2 years ago, 3 years ago, forget about it. As I showed you, last 5 quarters, this performance is becoming worse and worse. Most of it revenue, the company of course earned in the sector of shipping, and of course in Israel. By the way, it's an international company, but all of the income, all of the revenue related to Israel. The dividends, you see it was here $2 last year. It was 27, but most probably now they will cut the dividends. And also here, look, it's financial stability, it's financial position, debt to EBITDA ratio less than 1, and interest coverage also about 14, so quite nice. By the way, the total score is 6 from 10, it's okay, and ultimate score, the probability of default also about it's above 2, so in a gray zone. So actually the financial stability is okay. Debt to EBITDA ratio is really very less. Everything, if you see a figure of less than 3, it's actually fine. So I don't worry about their financial problems. But anyway, if we look here at the chart, actually it's now traded very close to the IPO price, so it can be a nice purchase. But look, after I see so tough decreasement in the revenue and the marginality, here it was, by the way, net profit margin 45%, now it's negative. So I'm expecting to see at least a bounce, a recover here in the performance. Maybe then I will try to buy it. But of course now it looks very cheap. If we'll check the PS ratio, price per revenue, it was 5, 1, 2. Now it's very cheap. So actually it seems it's very cheap stock now in terms of multiples, in terms of its stock price, but the risk also very huge here, because I don't see a recovery in the cash flow performance of these companies. So the next company is Inmode. This company, it's a healthcare technology sector. It's engaged in a beauty sector. Let's have a look on this company. So it designs, develops, manufactures, and markets minimally intensive authentic medical products. So it's some kind of beauty beauty area, beauty sphere. What I would like to check here, yeah, it's a growth stock, by the way. We see that revenue performed very well last years, but let's have a look on its quarterly performance. So it's more stable. We see a net profit margin of 40%. It's really very impressive. The revenue is quite stable. Here it was slight decreasement, but generally it's okay. So we see a performance since the beginning of the year more than 23%. So generally it's okay. By the way, here if I look at the chart, in my mind, here there is an impulse. So look, it can be the first one, the second, the third, and the fourth. If the correction here finished, so this segment supposed to be the fifth wave. In this case, of course, the fifth wave usually higher than the third, so I'm expecting to see at least about 100 bucks per share. So the growth potential is more than 100% if it would be this scenario. So of course we will check, but generally speaking, Inmode, it's a nice stock. This stock I like. Let's have a look on its financial position. Look, this company doesn't has debt at all. Very high financial strength, no debt. So ultimately the score is very impressive. So Inmode, in my mind, is a nice stock to add in my portfolio. Also, maybe I will do it by myself. High marginality, no debt at all. We see a very nice revenue grow, net income grow, and marginality for me is very important. Here we can check that last 5 quarters it's higher than, it's very close to 30%. It's very stable. And actually its growth is the market. S&P plus 20% and the Nasdaq about plus 40% this year, but this Inmode company with the ticker INMD also continue to grow towards the end of this year. So let's move to the next one. It's SolarEdge with the ticker SAGE. It's a nice company. I know this company. It's a company from electrical products. It's a green products from green energy sector. So look, here in my mind it was the first wave, the second, the third, the fourth. The correction I'm expecting it's some day to finish, and then we may see the fifth wave. So it's supposed to go higher. I remember I traded this stock a few years ago. It was a quarterly report, and after the report, most probably it was here. It was about 40 bucks. So I bought it about 200 bucks and sold about 30. So I made about 50%. So actually I made it 50% in few months. It was a nice and good trade. Yes, we see a range here for the last 3 years. It traded in a range. By the way, the range is about 100%, so it can be a nice trading strategy to buy here, sell here, to borders. So it looks very easy, and it's my view on this company. So look, no dividends, market cap 1 billion bucks. Here we see it's a very low marginality. You see 5%, 2%. Last quarter it was 14%. But maybe balance sheet changes. Maybe they sold some assets, but I'm not sure that it's the growth is here is so sharply. So I'm in doubt. Its performance since the beginning of the year minus 20%. As I told you previously, the S&P 500 growth is up 20%. So I'm not sure it's the best stock to invest right now. Also, let's have a look on its financial position. Look, the debt to EBITDA a little bit quite higher, less than 2, interest coverage 5. No, generally it's okay. And the Altman score also in the safe area. So not something specific, and don't worry. Interest coverage at higher than 5, it's okay. And the debt to EBITDA is just telling me that the company has a debt on the balance sheet. It of course pays interest, but not something specific I should be worried. I'm more worried about the share price. On its performance at last 3 years, we are in a range. So it's stopped to be a growth story. See here, look in 2018-19, its share price was $30. So it showed a nice performance of 500-600%. You can make a lot of money here. But last years it's not interesting for me, so not expensive. So it's the story about Sage, nice company, and maybe nice marginality, no problems with that, but the stock performance is very weak, and now actually it's now already oversold. The RSI, the momentum indicator, is about 40. As I told you, yeah, here about $200, it could be a nice point to pick this stock. Let's move to the next one. It's Playtika company. Its market share $4 billion. It's an IT company, if I'm not mistaken. Yeah, it's an IT company. Look at the performance; it's very stable. Last 5 years, last 5 quarters, the revenue very stable, and also the net profit margin also very stable. It looks good. 30% net profit margin. It's up, by the way. Actually, as at the Nasdaq 100, it's showing us same performance. Let's have a look a little bit closer at this company. This company engages in the development of mobile games. It builds live game operation services and a proprietary technology platform to support its portfolio of games. Okay, it's a game company founded about 13 years ago. Okay. Mobile games, and we see the web about 20%. Most of its revenue earned in the US, 70%. Looks good. Of course, it has a debt. Yeah, it has a debt. So I would like to check its financial position. Here it's only 4 from 10. Debt to EBITDA very close to 4. Interest coverage less than 5. And we see Altman. Altman's score, although it's in the safe area, but you're supposed to look at this company a little bit closer. It's becoming not so safe. Interest coverage is it's a working variant, but any time it can become very dangerous. But for now it's okay. So Playtika is interesting company if you're interested in the IT sector, in IT company. By the way, now stock performance is down more than 60%, so a nice discount. And actually, we are traded in a range, in a increasing channel. So the target here, it can be the higher border of this range. So in my mind, the growth potential here at least 30%. But look, it's very high correlation with the US market, with the Nasdaq 100. So if we see correction in the FANG, in the Apple, Google, so I'm for sure that this company also will sink, and it can be very, very, very dangerous. But for now, yeah. So Playtika for me looks very, very attractive company to add in my portfolio. And let's move to the next one, to the last one. Is Checkpoint Software company. It's IT software services. web protection. So actually here we also traded in the increasing channel for the last 8 years. Now we're closer to the lower border of the channel, so also I'm expecting to see the stock a little bit higher. Let's have a look on the performance. Quarterly, very stable revenue. Net income also is 35%, very impressive. But look, it just in this year it's up just 3%, so not something special. Actually, it traded at the same level of 2018. I don't know what the problem here. I think it's a nice sector, nice area, very supposed to be very interesting area, but maybe we don't know something, because here this it's supposed to grow, it's supposed to show a nice performance, but it doesn't grow. Also pay attention to the P ratio of 18 or 19. It's not cheap. The average for S&P 500, if I'm not mistaken, now 15, but the valuation is in my mind too expensive. Also the PS ratio, yeah, it's much better than 10, 6.6, but still it's higher than the average S&P 500. And let's have a look on the marginality. If it's 30%, yeah, because it's a highly marginal business, so 6 is generally okay. But I can't say that it's cheap. It's not cheap at all. Also here we can see that this company doesn't have debt on its balance sheet at all, so it's a very positive moment. So another nice company to at least to consider. So generally speaking, my for recap, yeah. So ZIM, I think I should add to my portfolio. It's very cheap now. Inmode, also nice marginality and very cheap. I'm expecting to see here the fifth way, the nice potential. SolarEdge, not interesting, it's a range, not something special. Playtika also I think I can add to my portfolio. It's a growth story, and also it's after a nice correction, so yeah, maybe I will consider it. And the Checkpoint, a nice company with a great marginality without debt, but it doesn't grow. It's the only problem here. And also the valuation, as I told you here, PE of 20, it's not cheap at all. So it's my view on top 5 Israeli companies. If you like this video, of course, press the like button. Don't forget to subscribe to my channel. If you want me to check maybe other countries, other sectors, of course, write it in the comments. And I think I will make it. No problem. So thank you for watching, and see you on the next time. Bye.